Die Sprachübertragung beginnt jetzt. Alle Teilnehmer befinden sich im Zuhörermodus.
Hello and good morning. It's Friday, 12th of January 2018. This is Berlin speaking, the Berlin office of Admiral Markets. Welcome to our daily real-time daily trading ideas webinar. My name is Jens. I'm just the introducer, and in a couple of minutes, our main analyst today, it's Friday, it's Dirk's day, will look with you over the markets. Let's start. 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and may one or two of your questions directly asked here in this webinar answered directly by us. Our goal is quick and smart every day, 15 to 20 minutes. So let's have a nice start. Of course, we start with every webinar with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you start Forex and CFD trading, please start with a demo account and make yourself familiar with trading, your personal risk management, and all belongings inside. If you like to see the new, since January 2018, obligated documents called KIDs, Key Information Documents, just visit our webpage and you will find it there in the Contact and Documents area. This is me. My name is Jens. My English, maybe you hear it, is made in Germany, but hopefully some of my quality too. But like I said, I'm not the main speaker. The main speaker is our daily analyst. Today, it's Dirk. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Mike's day. On Thursday, it's Leonard's day. And today, like Fridays, it's Dirk's day. Today's action are tomorrow results. Our leading day traders live every day to the same time. Yeah, and of course, if you like to trade Forex and CFDs, we would be happy if you do it with Admiral Markets. All details about our offer, of course, is to find at admiralmarkets.com. Just for an example, DAX 30 is our bestseller, one of the most traded instruments at Admiral Markets. Triple fixed spread of 0.8 points without any restrictions like minimum opening time or something like that. You can also trade mini lots starting from 0.1 lots and choosable leverage up to 500. All details also about our DAX offer, of course, at our web pages. Also there you will find something about our regulatory background. Admiral Markets UK, of course, is regulated by the Financial Conduct Authority. And if you'd like to speak with us, just call us or send us an email. And a couple of hours later, you will find our webinars recorded on our YouTube channel. youtube.com/Admiral Markets is the address for that. Enough from me. Now it's time for Dirk. Hi, good morning and still good year. I guess we didn't hurt us in this year 2018. So happy new year to you and let's have a look to the markets. Hi, good morning, Dirk.
Yes, good morning, Jens. Of course, happy new year to you as well and to the crowd out there. Thanks for having me on again. This is the year 2018. A couple of trades approximately have been made this morning. First to transmit my screen. Hopefully everybody can see it right now. Let's have a look at the coming days and weeks and months to come in direction, for example, for the German DAX, for the Euro-US dollar today, for the SPX, so-called shortening for the S&P 500, and maybe a couple of other markets if we still have the time. So let's have a look at the DAX first. On the DAX, the German DAX leading index went down the last hour candles, as you may see. That's a 1 hour chart here, and the last 3 hour candles red. And if you look at the last days, for example, and especially the last trading days, the so-called first trading day of the year 2018 has been a really red one. So we skipped and really kicked down the road and really ended up at 12,745. No, it was 12,740s in that direction. And if I remember the Xedra DAX number, it was around 12,745.15, I guess. So that was the year's low right now, and we really made a so-called short rally up to the old levels, as you can see. So we just click that just to have a little bit more room and show you the maybe interesting numbers right now and Fibonacci retracements. So if you have the record high from last year, the 13,526.56, and the low of 2018, if you just combine that to a Fibonacci retracement, to a Fibonacci analysis, you will get the retracements like I already mark them with horizontal lines right here, for example, the 50% and the 61.8%. So we are almost hovering around the 61.8%. This is the 13,230 level. This is something interesting, possibly interesting right now. If you are looking for a long scenario, you may wait a couple of minutes, or even if you wait the next 1 or 2 hours, you might see that we run into the support 1 scenario between the 13,160s, 80s. So it might be a little bit better risk-reward ratio than to start right now with a bullish move. And the other way around, you might have a short scenario around the 61.8 level. So this is something, for example, you on top may try to get in with the navigator first, and then let's see what happens here in the mini terminal, for example, and checking that one, and just to implement the first setup. And to start a position, for example, like a short position or a long position, just the way you properly can do it with this new tool with the order ladder. So, for example, you got the blue ones and the red ones, and if you are about to short the market, like I said, at the 61.8 level, you may have this level at the 61 around here with a 2 lot. And having a short setup from 13,322, for example, just click that one, and you're about to have a look at the 50%, for example. That's your first goal, for example. That's on top of that. That's the pivot point here, and don't forget, of course, don't forget to place your stop loss. You may see that one upside here, and as you can see, moving that one here, you see the numbers, the euro numbers, you see the percentages, and see you really see your risk. So, for example, give it a risk of 50 bucks, euros, of course. So let's say that's 48.55. It's 0.10%, and you got stuff like that seen with those tickets here: TP, sell limit, stop loss. And the one, if you do it the way old school, you will see it in your terminal. The trade is placed. It's a pending order right now, and you will be officially open that 61.8 Fibonacci retracement here to be short at 13,320s. So, for example, this would be the first start into this. Into this move. What happened the last days, or what happened yesterday? Why we saw a couple of days into the red, maybe just from the fundamentals. Maybe you didn't hear about it. For example, the German Federal Statistics Office, this is the one based in Wiesbaden, is giving out numbers, GDP numbers, and the German GDP growth and really picked up in 2017, and it went up to 2.2%. So the German GDP 2017 with 2.2% is something like a really good surprise, and it looks like it will be stable and even better in 2018, like the forecast says. So this is something surprising the market, and something maybe let's say something very, very positive for the DAX. What is on top of it positive was the Eurozone industrial production data yesterday. So this is something like selling on good news what happened yesterday. Because if you see that, for example, it was the 8th consecutive GDP positive data for the German economy. The last 8 years, Germany was growing. So you have the feeling, is there something more? Is there something better? So this is often something like a sell on news strategy. Possibly this morning, if you heard about it, it went about the press tickets, for example, from Berlin, news from Berlin, that the so-called coalition talks between the Christian Democrats and the Social Democrats are very much in progress, and they should end up in forming a new coalition. So that looks quite okay right now. I assume we still have a couple of hurdles, but let's see. It sounds positive. Okay, so that might end the period of non-government time, and that might end the period of the time where everybody thought, what is going on with the German government? There's no new government formed. Maybe this will be in effect in direction Eastern. You never know, but around Easter it might be the fact. Okay, so the position in the DAX, the short position is set, for example. Then we will have a look at Euro-US dollar. This morning, let's say I ended up in a bad trade, a really bad trade. I shorted the Euro-US dollar at the level of 120s, 120.60s, 120.70s, and I took the old high, so the 2017 high, around 120. 93 and 120.93 and a little bit on top, so 121.14 as a stop loss scenario. And a couple of minutes or approximately 20 minutes later, this trade was went busted. So because a little spike up the road, you see that one, the big candles, for example, looking at the 1 hour chart. And we really pressed it up to this resistance 2 level here. We are already at the daily high of 121.36. So what's going on with the next moves? You already see another short scenario. I will just explain you why and where the so-called numbers are from. So if you take the 4 hour charts, just going back to this, and just explaining where all these black horizontal lines are coming from. So you will see that I will just change that color to red because it's possibly more visible. And let's see, that's not red. And let's see what all these kind of horizontal lines are really meant to be. So you got this 138.2 and 161.8 levels, so-called projections. This is an old important level, 119.61. The last low around here was 117.17. So this is a combination of this Fibonacci analysis, giving you a hint and giving you a 161.8 level around this 121.10 marker. Where we are still hovering around here. So in combination, you got resistance 1 and resistance 2. Resistance 2 right now is interesting because it's already tested, 121.36. So that's the daily high right now. And if you just go to the lower time frame, for example, a 4 hour time frame, and you now take the old high, a new high, and mark another Fibonacci retracement. And of course, just not to confuse everybody, I will delete the old ones, going back. And you will see another projection level at 138.2 and 161.8 for next building up, for example, around here, where a stop loss scenario, the stop loss is 82.50, so the risk is 50 pips. And we will be in the middle of this 130.2 and 161.8 Fibonacci projection. So this is what is placed right now. And for example, just to explain that one, because of the risk and the position size, for example, the first trade this morning was a mini lot, so 0.10 lot, and the second one right now is a 0.2 mini lot position size. That's the reason, because somehow you need to delete, or you need to, let's say, minimize and your losses, and even try to build up a few pips on top of that. The management of the position is like always. If you have the chance to take out the half of the position, for example, at the resistance 1 level, which is around here, the 120.83, so old high levels here, old highs. You might be having a next ride with the position right down to the 61.8 level. And this one is, we'll mark that with a horizontal line as well. This one would be having something like a 120.25 goal. So this might be something you're thinking about when you are going into the short side, when you are looking for the short side. looking up for long scenarios, which are still in favor about a longer term scenario. For example, the next weeks to come. I just explained that because a couple of analysts, a couple of investment banks, and even the CFTC data, a lot of stuff like that showed you that Euro-US dollar might be heading into directions 123.50s up to 125 in the first quarter. Why is that happening? Why everybody is looking at the euro right now instead of the US dollar to be bullish? There is a certain unpredictability. Something like what is Trump going to do next? Yesterday we heard a lot about this NAFTA deal that they just want to maybe go out of the NAFTA deal and just try to negotiate it into a really new, better deal for the US. Let's see what happens with that one. If you look at the next Friday, for example, Friday the 19th is a very important data for the Euro-US dollar, and especially for the US dollar, because the debt limit negotiations are there's a debt limit discussion again, and it's coming up again and again and again in the next weeks to come. And there's still this word like shutdown hovering around. So this might be something you will be interested in as well. Okay, let's just place that one and just have the Euro-US dollar trade and stepping aside. And then we will have a look at the SPX. So the S&P 500. Every kind of market, like the US indices, like Dow Jones, like NASDAQ 100, or the so-called broader market, the S&P 500, they are in really all-time territories, every day. And if you look, for example, at the 1 hour chart here, if you look at the technical stuff like the relative strength index, so this kind of overbought territory is at 77. At the hourly chart. If you change that to a 4 hour chart, we are overbought with 78. If you change that to the daily, we are overbought at 82. And if you change that even to the weekly, 86, and to the monthly, 86 as well, you maybe get a picture or an idea how really historically overbought this kind of market is. And of course, it could be running further down the road, and it could be running to next targets up to this 2,800 marker, of course. But somehow, somewhere, you need to let's say, find some directions or find some hints where the market might be heading to. You got a couple of techniques as well here. If you change to the 1 hour chart as well, just squeeze that one, and you will have the last top here. This is the level of 2759.02. That's from the 9th of January, and you get the low. The low is at 2735, and that's the low of the 10th of January. If you combine that with a Fibonacci analysis, you will get projections like we see that one here at 138.2 again and 161.8. This is the level we are playing around here, and this is a level might be interesting to be on the short side, just because of those extremely overbought territories. And of course, it is Friday, and maybe a couple of investors maybe like to maybe take out some winners a little bit. Even if we get down some points, we might close it before the end of the day. So that's all right for us. For example, look at the stop loss scenario. You got the stop loss scenario with 10 points. So this is a risk of only 16.50 euros. It's just a little position with 2 lots. You are absolutely invited to widen positions like that, or to play that one with 5 lots or 10 lots, whatever. How much ever you might be really allowed to, because of risk and money management. Always think about that. Okay, where this position could run down to we always take the 61.8 levels and something like a goal, something to have a target, and just marking that one. That we will have something like this target of 275, even if we get down a couple of points, like 5 to 10 points until the evening, until the closing of Wall Street. be taking out this position and won't let it run forever, because always think about it. When you are short, you always have to pay interest rates. You don't earn them. You have to pay interest rates from day to day. Always think about that. If you are shorting a market a longer time, a longer period, you have to think about interest rates running against you, and somehow trades need to be financed, and that's the way you should think about it as well. Okay, so a couple of markets I discussed, and the last one I wanted to describe was Brent. The Brent crude, besides the WTI, the two world most important contracts. This one was already described this morning at the German version here, in the so-called Punkt 10 webinar. So this one is as well a topic for now, because it's still valid. The setup is still valid. I placed those the so-called Fibonacci analysis here as well, and took the last at the 1 hour chart, took the last low here at 69.05 and placed the Fibonacci analysis to the target here, to the top. So this is slightly above the $70 marker. 70.31 just to describe it exactly. And this is how you get projections to the downside if you are interested to have a short trade. So if you see that 61.8 level again, this is a nice scenario just to play that level, just to take that into account to go to the short side and have the first targets at 69.05, and just to use that horizontal line, marking it down, going to 138.2 at 68.58, and the 161.8 to 68.25.27. So this might be some kind of how you just get your own targets, just to use the Fibonacci tools. Okay, just from the fundamentals, the fundamentals tell you that the crude oil markets the last week were extremely bullish, just because of a couple of combinations of strong, severe weather in the US Northeast, and approximately down to almost to counties like Georgia and Florida. If you see North Florida, South Georgia, and you are talking about snow, everybody would tell you, what the hell is going on? Yes, it was that cold, and the cold winter went down even further down to Georgia. Okay, so there are a couple of reasons that, for example, U.S. Oil rigs need to be closed, a couple of them. So this is another pressure on the oil market. So that's the reason a couple of bucks the oil market went up. So something like the Brent and the WTI. And that's possibly over the next days to come and the next week. So we will be hoping to see some relief. Just to see some relief. That doesn't mean that the oil move and the bullish move at Brent and WTI needs to be over. It's just a setup just to take out the overbought or the good run, and just to have a contra trade against that extremely bullish run, just to take out a few bucks with this relief rally. Okay, been talking a lot. Jens, I didn't hear anything about you. maybe there are some questions.
There was one wish to look to more, but the time is our limit. So for today we are over. 50 to 10 minutes is our goal. But Monday, next coming work day, will be the next webinar. Real-time daily trading ideas every business day at the same time. So on Monday, it's Jay's day. Thank you for today. It's Friday, so thank you to Dirk, and have a nice day. And if you like to see and watch that again, a couple of hours later in our YouTube channel, so you don't have to miss it. Thanks and greetings from Berlin. Bye-bye.
Bye-bye. See you next week.